Hello, Warriors. Blake, I made it, buddy.
Yeah,
Can
I
you
see
get?
that. Good morning, Dale. Glad you made it through the blackouts.
I tell you what, it happened at like I don't know 4 in the afternoon.
Oh, geez.
Lasted hours. Um, so it was how quickly will the house heat up before they get the power back on?
Yeah, well, I know when we have an AC unit go down, like our house heats up really fast.
Yeah.
Um,
So anyway, and then my everything was screwed up because of the outage. So I do like that candle we're starting to get in Euro. So
yeah, Euro's firming up here. I've heard that there was EV, some Chinese, European Union talks that are going to be taking place regarding EVs and
okay.
importing them. So
Yeah.
that's given the euro a little bit more boost. And we're coming up towards that French election, and I'm sure that everybody's trying to figure out who's going to come out ahead, and how the market's going to take it. By the way, I some big developments, and I can let you take over.
No,
Are you just going to be here for the interview?
well, I'll interject, but you go ahead. I'm kind of catching up on things. Just one thing technically on Euro. When are the elections? Are they the end of this week or
There,
what?
yeah,
Sunday.
the 30th. Yeah.
Sunday.
Oh, Sunday? Okay.
Yeah.
108 close. It's not going to take much to get a 2 week reversal. 108 will do it, and I see you have some moving averages up there. So, I stayed short the dollar, and that was not a, that was pretty firm close Friday, but I'm still looking for a lower dollar here, and kind of like the way EG is acting too. So, this is uh, what I was looking for this week. It needed to turn from here at the 78.6 level. Kind of looks like a double bottom now. So, you could have stops under those lows of about 750, or I mean 650 or so in euro, and see if it
This
turns into anything good.
this is really, really just big support down here, and
Yeah.
everybody should be aware. Obviously, a break below 106.50 is obviously going to be very bearish. So it's going to be interesting to see. Interesting to see. Well, Dale, why don't you go ahead and get things together and jump back
Okay.
in a little bit later, before Adam gets
Adam.
here, and then
Okay.
you can interview him. Sounds good.
All right. Anyway, two power outages, 2 days into the summer. It's going to be a nerve-wracking summer here in the desert.
I
Yeah,
feel
California.
I feel sorry for you in those third world countries over there.
You
I
know
know.
what? That's
Seriously,
what, you know what? That's exactly what I was saying to my wife. It feels like a third world country here right
yep.
now. So
So sometimes it does.
get a
It's
room ready for Ryan. Get a room ready for me, buddy. Or
Always
or you,
welcome,
K
mate.
man.
Always welcome. Yeah.
All right.
Bring your
You have a
beers and
garage
have
or an attic or
them in the
anywhere you
fridge.
could stash an old trader?
Yeah, plenty of room, mate. Plenty of room. Just bring your beers. I'll put them in my fridge.
All right, guys. Glad
All
to be
right.
up and looking forward to listening to you guys.
All right. Thanks, Dale. All right. So K-Man, he's not going to be here today. He's actually out and about with his wife. He had to run a couple of errands. But we have Ryan here. And before I talk and bring in Ryan, I just want to just reference, we did have Mexican inflation data come out. And real quick, just a heads up, it looks a little the mid-month core inflation rate month over month was a little hotter, but year over year is still weakening. But the yeah, mid-month inflation can't both month over month data came in a little hotter. So you can see the dollar mex is, it was getting a little bit of a reversal from the 18 level and has bounced a little bit. I made a pretty big argument to be on the long side down here around the 18 level on the week ahead video. Guys, this is something, these are levels that I've been looking at for a long time. But just it's, I talked about it on the week ahead video because it's the 38% retracement. So just keep that in mind as you approach this. You know, don't forget there is a Mexican election, or there was a Mexican election. Scheinbaum's almost got a super majority. She's going to be pushing through a lot of reforms. You can see this is a really big, you know, a really big move higher above a lot of resistance levels, and the pullbacks have been fairly minor. And if we can hold above, let's just call it 1795, these are the levels that I've been wanting to get long for a little bit, and we haven't even seen any risk aversion. So if you see some risk aversion, the dollar Mexican peso, that would provoke more short covering as carry traders would unwind. I have to imagine, Ryan, that a lot of these carry traders, they originally got a little freaked out. They covered up some, but as stocks have been hovering around the 5,500 level, they've probably managed to put some back on over the last week. And I would assume that last week's price action, this is just carry traders putting some of those trades back on. Like, you know, I mean, if you got squeezed out of some and you're like, yeah, well, stocks aren't going down, so let's put some of that back on, some of that sweet ass carry. I'm assuming that's what has happened over the last week. So with that being said, if you start to see a little bit of risk aversion up at these levels, you could get a reversal of this pretty quickly, I would think. You have any thoughts on that, Ryan?
Yeah, pretty much similar, mate. Yeah, a bit of carry traders coming back in. You know, the short termers, the long termers aren't worried yet until we get above 19 up to 20s. And yeah, a little bit of easing maybe of that Mexican government risk premium that might have been going in there, just in case there were some big reforms. You know, again, we're seeing another government might be talking tough at the start, and then it all starts getting watered down a bit.
Yeah, of course. You know, they every that happens with every politician, right? The only difference that you know Scheinbaum has is that she has, you know, her predecessor, AMLO. I mean, he, you know, it's like, I don't want to say she's like would be like a puppet, but you know what I mean.
Yeah, it's continuation of
Yes.
the old guard, if you like, with a new face sort of
Yeah.
thing. And
Yeah,
yeah, I mean
exactly.
your levels are pretty simple for this one. It's 18 or 1850. You trade the range or you trade the break either side. But
Yeah.
it's becoming a bit of a big old zone now, that 1850.
Right. So this is going to be a really interesting one. I think it's one you guys should have on the radar. And you know, Ryan, we got a lot of stuff we need to talk about today before Dale comes back and meets with Adam.
Let's go.
Adam Button over at Forex Live. What's that?
Let's go.
Yeah. All right. So, and speaking of which, man, it is hot. I mean, when it is, you know, our low temperatures are, you know, where most people in the summers, high temperatures for summer are at. That's what I'm living with right now. So AC units are on 24 hours a day for the next 2-3 months. It's crazy. All right. So, let's talk about the yen. So when I got up this morning, I was like, oh, did we get the BOJ? So what happened here? Because this looks like it happened during the flow show.
Yeah, we were talking about gold, and I was talking about gold with one of our viewers, and came out and flagged it up so they'll watch dollar yen's on the move, and we sort of watched it, looking around for the headlines, checking the squawks and the feeds and everything, and yeah, it got down to the real figures 82, 158, 82 on the main price feeds, a little bit more on the retail side. So you're wondering if it's a bit of a phone around, but it bounced pretty quickly. Usually you might get 100, 150 points out of a phone around. So yeah, we've got end of month, end of quarter, end of half year end. It's going to be a funky week. We got dollar yen up near that prior high 160s, big level. We've got all the Kanda and Suzuki squawking about it. We've got news out of Japan that retailers are positioning long yen for the hopes of intervention, and you know there's a lot of different things circulating around the yen at the moment, and we might just be getting a few yen shorts, getting a bit nervous the higher it goes, because obviously that intervention last time is still fresh in the mind.
Yeah, and you know, Ryan, I talked about this on the week ahead video, and look, I put out a week ahead video. I don't necessarily expect my team to watch it just because, you guys deal with me all week. Last thing you need to do is watch me on a Saturday, I'm sure. But I did bring up this chart, and I'm gonna just pull it up this way. So, you know, I've been really focused on when you get some really big, long, elongated moves. You can see this disaster here. You get these long, elongated moves in the market, and the 6J is a really great example of it. The dollar max was another great example of this that had years of a trend going. And the dollar max, or excuse me, and then the euro, or excuse me, the yens. Jeez, sorry, it's early in the morning. The yen is very similar. This is what I've been looking at as a possible Wyckoff accumulation distribution type of pattern, and I'll show you the reason why, and how close it is to the 161% extension. So what you're going to see here, and let me draw it out for you. This is the yen as a whole. You could use the obviously the dollar yen as well, but the 6J is probably the better instrument in this case, because you got the selling climax over here, and that obviously was right here. All right, you got the selling climax volume. This is where you saw that spike higher in selling volume, and then spike higher in buying volume. A capitulation, almost. You could argue that much. Then you had the this point right there is this point right there, and then, you know, back and forth, right, is basically right here. You have a low volume failed sell-off. So right now we're in the midst of that. You can see the volume is much lower, and we're going to see, obviously, we get a reversal here in the yen. If we do, and we start to see a move higher in the yen, again, this is, you made the case, and I could agree with you here, Ryan. End of month, end of quarter. Remember, if you look at the CFTC data, speculators are aggressively long historically of the yen. And this is like the most aggressively long in 30 years that they've been long on record, CFTC data record, long yen, meaning that they are still playing carry and they expect it to go even lower. So that aggressive move, daily sentiment's been, you know, pretty extreme here. We might get a little bit of a reversal. If we do, then that's going to set up a reversal in you know, Wyckoff reversal pattern. So it's something that I've been paying attention to, not necessarily you know, that's it, but it's something that I think we need to be paying attention to. And and if we, yeah, you know, if we get
Bruce
back,
Fraser is doing cartwheels
what's
with
that?
you. Bruce Fraser is doing
Oh
cartwheels with
yeah,
you,
yeah. I mean,
showing the Wyckoff. Yeah.
Sorry, I was looking for my drawing tools here. It is, you know, something that I'll look at when you see an extended move. So whenever you get an extended multi-year move, you know, these patterns I start to pay a little bit closer attention to them, because they're not necessarily capitulation, but you start to see the reversals setting up. And when that happens, it's a big deal to me. A couple other things that have developed. I want to share with you guys Bitcoin. I know I just tweeted about it, but I want to talk about it as well. Let me pull up Bitcoin really quick. You know, Bitcoin just had this range extension, and that was a double top, you know, range extension. We're almost complete now, but this is a longer term. A lot of people are looking at it as a longer term cup and handle pattern, which I'm not gonna argue with them. I don't disagree. You know, this could be a big cup. There's your handle on a weekly chart. I would get a little worried if you start breaking below like 55,000, something like that. Then I think your longer term prospects of Bitcoin really developing into some huge, we're going to 100,000 next pattern is going to be greatly disrupted. If we start breaking below like the 55,000, maybe below 50,000, something like that, I think we're going to be trading back down in 30,000. Now, the reason why I make mention of this is because we have been in a period of risk on for God knows how long. I would argue that it's been about 15 to almost 17 years of a rally. minus COVID, these little dips, and maybe the European debt crisis spooked the market for a few months, but overall, we've been in a massive liquidity-driven rally since the great financial crisis right here in 09. So you're talking about 15 years of a massive rally of great proportions, money flooding into every asset class, including crypto. So if you start to see a little bit of a sell-off here over the course of the next couple months, and we start breaking back below, like, let's say 5,200, I think one of the first assets to go is going to be Bitcoin. I know a lot of people would argue and say, well, Blake, this is the defensive mechanism against fiat currencies. It's also, unfortunately for you, if you're a crypto investor, the one thing you have to keep in mind, this is now a Wall Street sales tool, institutional parking lot of fresh new money. And so when things start to reverse and you start to see things come under pressure, institutional money is going to come out of where it's it's like FIFO, first in, first out, or it'll be, no, wait, it's last in, first out. How do we use it?
It's a liquidity measure, Blake, don't you think? It's a measure of liquidity.
Well, it's going to be a high beta product on the way back down. That's the point I'm trying to make, is if equities come down, all the fresh money is going to come out of Bitcoin, and all the, because people are going to look around and go, okay, well, I don't want to sell my Nvidia, or maybe I don't want to sell my, my Microsoft, but we put some money into Bitcoin. We've done kind of well. We bought it at 52,000 when all the hedge funds were buying it, and here we are at 60. Let's just dump it. Let's take that off, and let's keep the Microsoft. Let's keep, it's going to be, again, it's going to be like LIFO, last in, first out, in investment world. And remember, it is a Wall Street vehicle now. It is an institutional money vehicle, and it's an institutional money liquidity drain too. When they have to pull money out, it's going to do that, unless there's a sovereign debt crisis and you see, a collapse of a government. Then you might see people run to Bitcoin. But right now, I would use it as a high beta investment vehicle. And if stocks start to come under pressure, my assumption is Bitcoin's going to come under pressure too. And that's the downside to Bitcoin right now, is you have to understand why stocks, if stocks are coming under pressure because they're just, we're seeing some reversal risk. Bitcoin's going to suffer again. If we're coming down because banks are failing all over the globe, Bitcoin might actually do well. So but that's something I need to point out, especially those of you that are longer term crypto hodlers, I guess we call them. So Ryan, let me ask you this. Going back to currencies. So what do you think?
I thought you were going to ask me about Bitcoin for a minute.
No, of course not. I wouldn't do that. So let me ask you this about your opinions on the euro as we go into this election. How are you feeling about the euro and where it's currently at? I mean, this is a recovery, and typically when you see a move like this, this is a move to sell. This is a move to sell into, especially if people are a little bit worried about what's going to happen in Europe. What are your thoughts?
Yeah, well, the picture is we're still walking the same old ranges. 106, 109, 107, 109, whatever you want to call it. We're still in old ground. There has been a bit of a bounce off. Again, we're hearing a few bits and pieces from France. The potential new finance minister for Le Pen is saying that, we're not going to be the same old right-wing party running up deficits. We're going to respect EU fiscal rules. So again, it's another bit of watering down headlines we're getting from Le Pen and this election. And I think there's two things there. There's a bit of easing of tensions around if Le Pen gets in. Secondly, the market seemingly might be ready for it because Macron keeps coming third in all the polling. But it does create a bit of risk for Sunday, because it means we potentially might get a gap open on Monday morning when we get the results. K-Man's looking in, I'll look into it too, how these results go, because it could be a situation where if Macron comes third, he doesn't even make it through to the second round. So we could have the right wing and left wing alliance going through to the second round. I think that's a bit of a risk that people need to pay attention to.
What would that do to the euro, in your opinion?
I think that would be the worst case scenario if Macron, is completely out of the picture. And then if it's a fight,
so we could literally wake up with the euro gapping, below 107. If let's just say we're here, euro might actually gap, below this support.
Very much so. Yeah, we could be down at 106. It all depends again on what, if Le Pen gets in, what is she going to do? Is she going to be hardline like she's been talking for years, or is she going to soften up like we've seen in other countries? I'm slightly favouring the softening upside, given what we've read so far, but it's still a risk because it's one of the big countries that have swung right, and then you got Italy and you got the Netherlands and you got part of Belgium. There's a political shift happening, and that's something that investors are going to pay attention to. The Macron gamble at the moment is looking a bit suspect, like it's going to blow up in his face. We need to be careful going into this week. I'm not sure we're trading it right now, but I definitely think come Friday, end of month and everything, the market will be paying a bit more attention to those elections.
Yeah, I was going to say this is going to be one of those that you're going to want to watch your weekend risk. So, for example, and I want to just draw this out for you guys, like we're here right now, and like let's say by Friday we're trading back down towards these lows, and we are, you can see the market's a little worried, and by the end of the week we're down there. You got to be careful being long because we could end up gapping down below support, and then next thing you're getting a debt crisis, blowout of French German spreads again, and next thing you got the euro trading below 105. The flip side is if we're trading like, let's say where we're at right now, and depending on the election, we could open up near the 200 DMA or open up down here. So I think a lot of it's going to have to do with where it's at as we go into the weekend, and how you've positioned yourself, if you are positioning yourself right now. I already am. So I'm just telling you guys that right now. And if you're in the ForexAnalytix chat room, you kind of know where I'm staking my claim already. So there's that. And because I had some overnight orders out last night. So anyway, Ryan, what else should we be thinking this week? What else are you looking at this week? I mean, it is a PCE week. We got PCE week. I did the Forex Analytics week ahead video. I talked plenty about what I think is going on. What else are you going to be looking at this week?
Yeah, we've got consumer confidence tomorrow, the main conference board one. We've got a shed load of housing data, which is big in focus again after last week's building permit starts numbers and existing sales. So that's an area I'm watching closely at the moment, because it's all the property market, real estate market is always one that is an early signal for contraction and expansion in the economy. So
I'm glad you brought that up. I had to talk about this. I actually spent a little bit of time on the week ahead video talking about the housing. I'm like, we're getting housing starts and we're also getting house price index, two totally different things, and they affect two totally different mindsets of the market. The house price index is obviously what a house is worth, basically, and this is where a lot of U.S. Just consumers have a majority of their wealth. The ones that own homes, their wealth creation is from their real estate, and so that's a big deal. But then housing starts really is more for the overall economy, because if housing starts are really starting a weekend, that's tough on the the contractors and
it's sort of like the starts and permits. That's sort of like the construction side of the housing market. You need financing for that to build buy plots, get workforce in, develop that sort of thing. And so you could have two parts of the market working at different speeds. So the construction side might be slowing down, like we saw with starts and permits, but existing sales were pretty strong and they had record prices for the median sale price. So on the, like you say, the consumer side where people are buying and selling houses, that looks fine. But the finance side, and that's the side that's being affected by rate hikes, that's starting to show some wobbles. And that's what I like to look at, because if they pick up again, it becomes whether we're going to soft land or nosedive, and that's when I'll get interested for what's happening with the Fed.
Right. Yeah, exactly. I think it's really important that you guys understand like why, what's moving and how it affects the market and in what direction. What else are you looking at aside
you
from
know
that?
what? You know how a lot of supply, we're hearing about this restricted supply in housing. You know how a lot of supply could come back on the market as if consumer spending continues or begins to weaken, and people aren't out there taking vacations using Airbnb and all the other ones, all the real estate that was purchased for vacation rentals.
Yeah.
If those guys are just have their places sitting empty, there'll be more housing supply. I
Oh,
think that's a big part
those
of
are
it.
those are definitely going to hit the market. All Airbnbs here in the US are just not making money. I believe me, I know so many people that own. I'm not a real estate investor, but I've got so many friends that are real estate investors.
They're not
And
getting them rented like, everyone took their
no,
revenge vacations
yeah,
last year, spent
Yeah.
more than they ever because of the 2 years of being confined. And I've even noticed some slowing in restaurants and stuff. By the time people announce that we're in a recession, we had already been in. Normally, we're already in one for many months before
yeah.
that.
We had the
Go ahead.
same. We had the same anecdotal evidence in our chat room. I was speaking to people last week. They were saying in certain areas, one of our users saying that he's not seeing people moving up the housing ladder. They're now spending money on extending their places, making them livable for the in-laws and whatever. And that's another signal to say, well, you'll start getting supply in the market if people aren't moving, because if you've been on a mortgage for the last 10 years at close as 1% or whatever, you want to move house, you're now going to be paying 6%. So why do it? Just stay where you are for the next, until things improve. And then that
Right.
way, that's when you get the slowdown in the consumer side of the housing market. And then, the snowball's rolling, like you say, down. Before you know it, you're in recession. But if you can pick up these little signals and they become a trend, that's when you can start positioning for it in trading terms.
Yeah. One of the things I think that that people really should be focused on too is regarding housing is just pay attention to rates. I mean, the people just until the Fed starts cutting, that might support the market a little bit, but that corporations are out. They want to pick up all these Airbnbs that are out there owned by these individuals, and when they dip and when prices dip, they're going to be out there trying to buy them. I actually believe the real estate market, unless legislation changes it, we're going to be in a situation, whether it's 10 15 years from now, where we'll probably end up going on maybe close to half of the housing will be owned by corporations, and that's unfortunate un-American thing to happen, but I believe that is what is transpiring here in the US. Anyway, that's neither here nor there at this moment. But as far as data goes, we don't have any data this morning. Dale, I'm going to bring you on here in just a second to talk about or talk to Adam and interview Adam from Forex Live. But before we do that, I just want to note really quick. We talked about the yen. We talked about the euro. I also want to chat with you a little bit about the US dollar, South African rand. Mentioned it last week as we had this divergent relative strength into what I think is, just into a triangle consolidation here, 78% retracement. Ryan, I know you're picking up, or last week you picked up some of this long here as well. And I'm long a little bit too. But this is one of those that if you start to see risk roll over a little bit, that this dollar rand can be right back up at 19. What are you thinking of here?
Yeah, well, I've just taken a little bit off my long. This is a funny one. It's one of these pairs where if you're offside, you think, oh, I better cut the position. Then when you go onside again, you think, oh no, I'm going to hold it. But there's been a few noises out of South Africa that this national government unity thing that Ramaphosa has put together is already trying to unravel at the seams. So if that continues, we're probably due a bit more upside, maybe up 19s again. So yeah, it's going the right way. As long as we stay above 18, that's the key level. Do that, and yeah, we should be okay for long still.
All right, sounds good. Thanks, Ryan, for your inputs. And Dale, glad you made it back with avoiding all these blackouts. And I know, unfortunately, it's going to be hot for the next couple months. Hopefully, you don't have to endure a few more of those. So,
yeah. Anyway, it's like living in a steam bath. So if people, or even if it's not humid, it's like the breeze is. Just imagine turning your hair dryer on high, with it pointed at your face.
That's exactly what it's like.
I've just seen something now. You can't get power to your home, but in North Carolina, you can hire a llama to be your caddy for golf.
How about that? Yeah,
how about that?
I like that. All right, well, thanks, guys. I'm glad to be back. I think it's going to be an interesting week. Reeling the dollar turns good or bad, and according to my work this week. So we'll see what happens there. We'll see if metals get a response after they got hammered. K-Man didn't come in because gold reversed yesterday, Friday. Boy, was that a reversal, huh?
It was a big one.
Yeah. We were all talking about, well, new highs are a layup, and then here we are now. Where's the correction going to end again? So let's have a great week. Hey, everyone, we're going to definitely be laying it out on the court for you, try and give you some guidance. And this is part of it, having someone like Adam Button with us. So Adam, great to have you back in F.A.C.E. I missed you last time. Glad I almost missed you this time. Glad to be able to speak to you and ask you a few questions here.
Yeah, thanks for joining us, Adam. I'm gonna bow out too.
All right. Well,
so how you doing, buddy?
Good. I don't know if I can play the video. I got something for you here.
Oh, you have a video?
Yeah, I don't know if it's showing. Is it showing? I think it's showing there now. Yeah, well, that's not a video. It's a video of me, but I got the old representing here. This is where your neck of the woods, right, Dale?
Yeah. San Diego?
Yeah.
Oh, yeah. So
plus also USD. I love this shirt.
Well, your kids, are you saving for them to be able to go there?
Well, that'd be nice. I'd visit them there. Yeah, I know a friend of mine went to San Diego State, played soccer there. That seemed like a good gig.
Yeah, they'll be living near La Jolla.
Yeah, I've been there. It's nice. Let me tell you, I would prefer to have air conditioning though in the summer.
Yeah, well, they're on the coast. Okay, so that's their air conditioning. They have the ocean. I'm inland.
I understand you got to do pretty well to get a place on the coast in San Diego. So we're gonna keep grinding away.
Yeah.
I think that's about the most expensive real estate in America.
Yeah, so I mean, let's talk about what's happening in your neck of the woods in Canada. Are you still long-term bear on the Canadian dollar, which means you're bullish USD CAD?
Yeah, no, it's coming apart at the seams here. I know we're up like 6 of the last 7 days or whatever in the Canadian dollar, down in dollar CAD, and it's listen, I'm a fade on this. The real estate market here it's really coming undone, and I had a moment there, doubt in the springtime as it got a little bit better, but it's not pretty. And I'm not particularly excited about risk assets here as well. I think Bitcoin is a bit of a tell today.
Okay.
The Russell can't seem to get going. You look at cyclicals, the Caterpillar stock, steel, any of that is struggling badly right now. Lumber. I think I'm starting to get that kind of 2008 summer vibe. A bit of a calm before the storm here.
Yeah, and that's interesting because the poster child, NVIDIA, put in a key reversal. And you've been around long enough, Adam, to know that when things are parabolic like this, you look for a key reversal.
I mean, it doesn't get any clearer than that, right? Like if you're long, congratulations. And I've been long, but I got out, I guess, too early. But if I was long, I'd be out. because that is exactly what that is. And a 3% up and then a 3% down the end of the day, and drops again on Friday, even though it was a decent day for risk assets. And I don't know what this is going to sustain the rally on if it's not AI anymore. And this is due, like, it can go down 20% and it's not that big a deal. But
Well,
what's
that's
going to
what
hold
it
the
did here. That's
what's
what
going to
it
hold the
did
rest of the
here.
market up? I mean, I think you had some other leadership then, or some other things that could pick up the slack. But if AI takes a break, yeah, there's someone in the chat saying there's some insider selling as well. Like I think everything is just starting to line up, and it's just screaming to me like get out of the way. And it's really just a matter of how you want to trade now. I think the risk off. I think bonds are pretty compelling. But you know, I'm trying not to overthink this.
Yeah. So, okay. When you get that kind of vibe, it's interesting. You know, I'm thinking some people are going to be caught offside because if we do have risk off, and I do think we have at least a correction here. Maybe S&Ps get to 5,200 or so before they, you know, down into here before they make another attempt if they are going to continue higher. So is it possible that we can have risk off without the dollar being a safe haven this time, and that there's
I mean,
flows
yeah,
out of the dollar into, you know, emerging markets and other markets that haven't been as you know, the best sturdy shirt. We turn into not the best sturdy shirt.
maybe the yen. I mean, I'm not
Uh,
buying the euro. You guys were just talking about the politics over there. It's terrible. You know, sterling, maybe. I mean, I'm certainly not buying CAD or commodity currencies.
okay, you're a dollar bull.
Uh, and other emerging markets. I mean, you're talking about South Africa. I was there last time. I was just
Yeah,
there, and you know, it's certainly not buying that, whatever they're selling. I mean, one day will be, but I don't think that day's today. So yeah,
okay.
I mean, it's got to be the dollar for me. And even gold, like, is gold really that safe haven asset in a risk off environment? I don't think it is. Um, so that's one to maybe think about, but I find I have a hard time. You know, there's been a lot of positive risk correlation with the dollar.
There has. Yeah,
So and gold, and so I don't really look at that head and shoulders. I mean, that jumps off the page, right? And it looked like it was going to invalidate it on Thursday last week, and then
exactly.
Friday
Right.
slammed it.
Yeah.
And
Who they call that guy? Slammy Whammy or Sammy Slammy came into the precious metals. And Luke Roman has an interesting take that it happens on Fridays when the Chinese aren't in the market. Do you
well,
think there's a
there's
war?
something to that, and I think that was the tell, right? When we got that May China data and the central bank wasn't adding, I think,
Yeah,
oh man, that was a sinking feeling when I saw that headline because I was long.
yeah,
It was time to get
yeah.
out. Um, you know, and you know me, Dale. I don't come on here and be bearish very often. And
No,
I
you
just
don't.
think um this is like what could happen. You know, the data could, okay, I can't even construct that good of a scene with the data. So ISM was good on Friday, or sorry, the S&P PMI was good on Friday, 26-month high. That's probably bad news. Pricing in 2 Fed cuts still, but I think they could maybe do 0 the way they're talking. And they're definitely going to be late. Whatever it is, they're going to be late. Like, a recession will come at some point and they'll be late. So
Then maybe they're already late.
yeah, exactly. So at best case, they're going to be late later.
Yeah,
Like so, you know, generals always fight the last war, right? I know you love the saying, and they're fighting the
yeah,
inflation war when I think that's over. I mean, it might be over forever the way AI is going, and the job losses that are coming from that, which I almost feel like I'm turning into a crazy talk guy thinking like unemployment might go to 20% on this.
yeah,
And
because of displacement. Actually, there was a piece on 60 Minutes about quantum computing, which is the next step that is even more powerful than AI. The
I mean,
computing power of quantum, you know, it's kind of like Oppenheimer in technology instead of just the bomb. It's
Yeah,
physics. Yeah.
I mean, they've been working on that for a while. It does seem really difficult, that job, but robotics, I don't think seems so difficult anymore. If you have robots that can recognize what's going on, well, now it's just a mechanical challenge to build the robots, and programming them seems almost trivial with AI. So, I don't, how many jobs are really going to be at Amazon warehouses or in fast food? I don't think food prep is beyond what they can do. And I mean how many people work in food prep in the United States or in the world?
All right.
That's
I know. I also know that you're an energy trader, and
yeah.
you usually have a view on oil. And there are a lot of people that are bearish because of economic weakness and demand. But do you think that what we're getting here in the last few weeks, where, first we had this to clean out the bulls on the OPEC meeting right here,
Well,
and now we squeezed out the bears over here. Could this be setting up a big rally towards 100? Like this is one rally and this was a correction and we're going to get another move? And could it be instead of demand driven, although I hear they're going to have to use more oil to generate electricity globally, but could it also be some type of supply shock because of what's happening in the Middle East? Do you worry
well, that
about that?
I am a bit worried about that. I mean, wars are hard to predict, right? It looks like Israel, and Lebanon, and then who knows
Yeah.
what's going to spiral from that. Again, I mean, it's been really tough to make money trading geopolitics. I mean, there was a fade trade at one point on when Israel and Iran were lobbing that
Yeah.
volley at each other. But other than that, I don't know. The Middle East is tough, and wars are tough to predict. But you've got China is a big part of the demand equation, and China is doing okay. Now, you look at
Okay.
the Chinese market, it's again, predictions about China extremely difficult, but the economy is improving there, and that is a marginal buyer of oil, and so is India. Right now, you have
Yeah.
OPEC. I mean, there is 5 million barrels of spare capacity there, so you can't get above 100 for sure. And shale can certainly turn on the taps as well, though I don't think that's going to happen this year. And I think U.S. production is going to disappoint this year. But,
Okay.
I look at the U.S. economy, I think is doing okay now. That ISM number was pretty strong. United Airlines on Friday said they expect this Memorial Day weekend, not Memorial, July 4th weekend to be the strongest ever for travel demand. And so aviation is actually eating up a lot of demand. But then you look at things like hotels, like you guys mentioned, and or at least Airbnbs, and it's not doing great. So, if it is 90, and I'm kind of on board with that because the market got ultra short. Like if you saw positioning 2 weeks ago, ultimately was the tell when we kind of got knocked down there. I think it was the most negative ever on the CFTC data on oil. Now, some of that represents a
Yeah.
lot of interest in oil now, but it's more and more financialized oil. And so,
Good point.
I think I am long right now. I'm kind of uncomfortably long, and I would like to see 90, but I don't know about it much higher than that. Again, you maybe could get that kind of squeeze because some of the things you're talking about with financials, US doing okay. But I mean, again, there's still 5 million barrels out there that OPEC can tap. So
Okay.
it's tough to
Well,
be
you
really.
did bring up bonds, and I think the last month was important. We pulled back. If you look at this, it was a wedge, but on the monthly, this could be a right shoulder. Here's your left shoulder. Here's your head, putting in higher lows here. And then if we get over 105, you're talking about, maybe 110, maybe 115. Um, I mean, people are pretty conditioned not to buy treasuries. I think there was a story about in Italy where they converted, I don't know, 90-day paper into 10-year bonds.
Yeah, that's tough. I mean, it probably paid pretty well, but
That's like a bail-in almost.
I like it. I like bonds right now, and I think people are going to look back and say, I mean, I like the long end especially,
Yeah.
or because we're going to look back if there is 20% unemployment and think, wow, we had a chance to get not necessarily in treasuries, but if you go with the risk curve, I mean, 6% is not hard to find in some real high quality.
Junk? You mean in some of the junk bonds?
No, I just think if you not
Corporates?
junk, I don't think you need to go down that far.
Okay.
Some high
Corporates.
quality corporates, that's for
Yeah.
sure. Or even prefs, which high quality preferreds. There's some upwards of 6.
Yeah.
So that's not going to last. And it's just a matter of, okay, do you want to be early or do you want to be late? And I agree with what you're saying about the chart. And number two, the last few auctions have been very strong. I think we stopped through like 4 in a row now after a period of time into the end of May when the bond market couldn't seem to find a bid. And now it
Yeah.
seems real money's loading up. We've got 2s, 5s, and 7s this week, which is what I'll be watching very closely this week.
These were
And
failed auctions right here, Adam. Exactly what you're talking about. And all it did was pull back to the wedge line. So, I mean, I've been talking about this wedge for a while. We had a throw over, then we got back inside, then we held it, and then we had a breakout over 90. I went short these bonds, and there still are a lot of bond bears, aren't there? Because of
it's
our,
certainly not
our
crowded
fiscal
trade.
position.
Well, that's it. You worry about supply, right? You worry about supply a lot. And then again, and I think there's a bit of a knee jerk to stay in tech. Like tech investors, they don't get shaken out. I feel like they've learned their lesson of that you buy the dips in tech. I think ultimately that will somehow get blown out at some future point, but it's pretty hard to bet against some of these mega cap tech stocks. And then, real estate's not looking so hot. I just think a lot of roads do lead back to bonds. And again, you're getting paid pretty handsomely if you start to
Yeah.
think, wow, we are in a recession. And people keep saying, oh, the Fed's not going to go back down as low as they did. Like 3%'s the floor, right? So you think, well, I can still get 3% in 2s. That seems insane to me. If there's a recession and inflation's low, why wouldn't they keep cutting? I mean, they're not going to go like maybe they'll be late again, which is just going to make them cut more. Like they'll say, we don't want to fuel inflation again. Well, now you've still got rates too high, so you have a worse economy. So more and more and more layoffs, and you're just eventually going to be chasing it right down to 0 probably again. And then you look back and you think, man, I could have had 6% for 20 years.
How much are real estate values down in Canada, Adam?
Well, it is pretty regional. Toronto's really cracking now. And, we're seeing it was 20% sort of the bottom, but maybe bounce 5 off that. But if you have places like Alberta, oil country, it's at all-time highs. And you have Montreal actually doing pretty well as well. So Vancouver, there's just an influx of foreign money, but it's coming off. But Toronto looks really cooked. And the condo market there, I don't know what they do out in San Diego, but they're like 500 square foot condos and nobody wants them
Yeah.
anymore. And they were full of Airbnbs too.
Right.
And it's a lot of the same things you saw in the US. It was a lot of and in the single family home market, a lot of pre-sales. Right? So if you played this game the last 20 years in Canada, it was a slam dunk. You bought pre-sale before it was ever constructed, say 3 years out. You never took possession of the house and you flipped it before it closed and you made a lot of money and you just did this over and over again. So next thing you know, you're doing it with 10 houses and they're all now hitting the finish line and they're all way underwater, like 20, 25%. And they're terrible houses. And there is still a lot in the pipeline, especially in condos, but also in single family homes. And you drive through these neighborhoods and it's just desolate because they're not even finishing the houses now. And I think it's just going to be one after the other hitting the market here for a number of years. And, rate cuts maybe saves it to some extent because we have massive population growth in Canada. But I don't know, people just can't pay 1.2 for a cookie cutter home.
Yeah. So it sounds like the U.S. in '08. Are there any Canadian banks in trouble? Who's holding the paper? And could there be contagion?
It's a different sort of story in Canada. The number one is that I don't think the banks are actually that. I mean, they'll be on the consumer side, the lending side, the macro side, but
Yeah.
not in the same way as Canada is. I think a lot of the builders end up holding it. I think a lot of the consumers. So in America, you have non-recourse mortgages, right? So, if Dale's underwater, you bought a house, you just give the keys back to the bank and here's
Right.
your house. And now you lost a bunch of money on the mortgage. In Canada, it's full recourse. So they take everything. They'll take your car, they'll take your retirement savings. And
Wow.
so the consumer just gets blasted on that. Anybody
Wow.
who's holding it you can't recover, right? So say in the
Right.
American financial crisis, as ugly as it was, you could walk away from the house and you're kind of scot-free and you can start over again. Whereas Canada, like, you're going into personal bankruptcy.
Got it.
And that is going to really depress the Canadian consumer, I think, for
Years.
a decade plus. That's
Yeah.
a big, big hole to climb out of. So that's
Okay.
that's going to be the main difference, and it does not bode well. I'm a
Yeah,
very
it's the most cautious I've heard you, and it's probably hard not to be when you're surrounded in an environment, the region you live in, with you know, hearing what people are saying and feeling the pain that's out there.
out there. And like
So
I should like condition it a little bit. You have people also in Canada that bought houses 25 years ago, right, for nothing, and they're
right,
worth a lot now, and they're spending, right, and they're keeping it up. And if you bought that $50,000 house that's worth $2 million today,
yeah,
like if that goes down by 30%, like you still have a lot of money in your pocket. And I think only something like 1/3 of Canadians have mortgages, because a lot of that money is built in. But I think ultimately it's just a very slow motion train wreck, because you have this older cohort that has money to spend and it's not going to bother them, I think. And then there's a younger cohort that's absolutely tapped out and can't buy the houses until eventually those houses have to turn over and the whole thing comes down. So it's like a 10-20 year just underperformance, and I think it's going to be reflected in the currency because rates are going to have to come down.
okay. So I'm probably going to be able to speak to you one more time before the presidential elections here in the U.S. We have the Super Bowl Thursday night, the debate, and uh, someone asked me about the political uncertainty in the UK, if that was going to hurt the pound against the dollar. And my response was, I don't think there's any country on the globe that has more political uncertainty than the US. Do you have any kind of feeling about what's going to happen this fall here in the
Well,
US?
I think I don't have it. I mean, predictions are hard to make, but I'll say the one scenario I think is probably the worst case scenario is, say, so the Senate's going to be Republican. I think that's a done deal. The White House probably, if you look at betting markets, something close to 50-50. Doesn't seem that way in my mind, but I think the House is what really matters. If you have, say, Republicans get the Senate and the White House, but Democrats hold the House, it's just gridlock. And I just don't really see any scenario that doesn't end in some, and that's the worst gridlock. And I think probably the best case scenario is you get a Republican sweep, and then you can, like, the fiscal train keeps on going until eventually it stops. But that, it can go on for maybe 10 more years. You don't know. It's like Japan. But if you end up in a scenario where it's gridlock, I think there's just going to be such tension. And I think that both sides are willing to sacrifice the economy just to play games, just to blame the other side if they have the White House, right? Because everyone blames the president. And I think that kind of scenario that I outlined, where Democrats hold the House, is their best case scenario. Because, yeah, they'll take the pain for like 2 years, blame everything on Trump, kill all the fiscal side, and then they'll probably take the Senate back at the midterms, expand the lead in the House in the midterms, and then they figure they'll probably tee up something for the White House in 4 years and get even more of a majority in the Senate then.
Do you
So,
really think we're going to know who the president is on election day?
well, that, I mean, that's sort of
I
short-term
mean, do you think
uncertainty.
we could have a mess here,
Do you ever
Adam?
think, I don't even know, what's that scenarios? And they talk about, like, they run 1,000 scenarios and 5 of them come out where it's a tie in the Electoral College. Like, that kind of thing just
Yeah.
seems like, whoa. And it's not like, it's not a 5% chance. It's like a 0.5% chance, but 0.5 is pretty high. And, like, I don't see any scenario where that ends well. And
Okay.
then, like you say, these other scenarios with vote counting, and there's so much
Yeah, they're not
mistrust.
going to accept the legitimacy of the election, depending on
I
both sides, most likely.
Well, I mean, that is,
Isn't
again,
that a
there are a lot of
constitutional
election night
crisis?
scenarios. I'm always of the opinion, generally, the sun comes up the next morning and
Okay.
businesses keep on working, and Congress has been bought off anyway. They're not going to do anything to hurt Microsoft. So,
Okay.
and I feel the same way about Europe. It does always seem different, but I think it'll be fine. I
Okay.
hope. But yeah, like there are certainly it's a long ways out, but
Okay.
it's a little.
Well-
Again, that just makes me want to be more cautious as well. Like I really think Bitcoin's sending a pretty strong signal here. Man.
Yeah, I'm looking for about 40,000 actually, but we're into the fourth day of summer. What what are the best opportunities going into the fall that you
Yeah,
see, Adam?
I think bonds. I mean, the yen or Swissy could be interesting here. Short CAD. Other than that, like I'm kind of looking out there and I'm thinking about the last, like the COVID cycle. And there was a lot of sort of effort. Okay, if you take quality, you go to utilities, you go to like these kind of safe havens, you'll be all right. But the way the market works now, it's so much options activity and the whole thing gets flushed. So like straight cash or straight dollars or bonds, you worry. I don't think it could be like COVID where bonds get blown up like they did, but you never know. And I just hate to be bearish and try to rush the trade when I think, well, maybe you just wait 6 months and let the dust settle. There's always another trade. So that's how I'm thinking about it right now, because there are a lot of things I like in the longer term, but
Yeah, I
I
know you
just
like
don't.
copper. Is
Well,
this a
that's it,
great
right?
buying opportunity in
No,
copper?
I don't think it is. I mean, it's a 2026 trade. It's always been a 2026 trade when it physically gets tight.
Yeah.
And that's even looking better with all the data centers and everything else that's happening. And I think it's not that big of a rush to get in. It has been a wonderful trade.
Yeah,
The copper
huge.
miners did so well. And
Yeah,
I've been talking about that for a long time, and it was nice
long
to see
time.
it today.
Yeah.
But I'm
So
out.
continue to buy weakness in the copper miners
Well,
if we
that's
get
it.
a
I think
sympathy sell-off with the market.
I think that's probably a ways away. Like I'm just not in a rush here and I think discretion is the better part of valor, and I think we're close to that phase now. Now, what could happen? There's positive July seasonals. The AI trade can really cook further. Um, the macro trade can help. Inflation is coming down. But we saw it. CPI was low. Like, what is that telling you in the market? CPI comes in way lower than any estimate. And what did the
Yeah.
market do? Barely went up. Like, if you
Yeah.
can't get a rally on CPI anymore, what is there?
When
You
do we
know?
start getting employment numbers that are softening? Do you
Yeah,
think
and
that's
I'd
around the
be curious to
corner?
see how the market takes that. If the Fed put isn't there right now. I mean, I think it ultimately is because they will cut down to zero, but there's going to be some kicking and screaming on the way down. You look at a lot of those, job openings or Indeed or whatever these other surveys of jobs, they're all softening. So, once the layoffs start, you can't stop it by cutting from five 5.75 down to 5.5. Like it doesn't stop till you get to like 2.5. And that's going to might take the Fed 2 years. So, you know, I'm having a hard time finding anything to be optimistic about in this market for the first time in I don't know how long.
Okay, well, my takeaway here from Adam, and it's a little, I usually don't have this kind of tone. I sense caution and patience is the best instrument to use, and brings to mind that we're paid to wait.
There's always
That
another trade. There really
there's
is.
always another trade and some caution and little risk aversion in this time. And Canada still feel that Canada's economy is in deep trouble. So compared to the dollar, it should depreciate. And long a little crude, but not the kind of enthusiasm that I normally hear from you. So we had a cautious, patient Adam Button here today, and it's important that you guys follow him here on Forex Live. And and follow him on Twitter at FX_button. So anything new at Forex Live you want to talk about?
Yeah, we're just rolling on here. Sort of dabbling in a few more, trying to wider net on the things that we're writing about a bit lately. But no, we just stay in the trenches. I mean, that's the thing about Forex Live is you know what you're getting in a world where everybody's trying to chase the new thing.
Yeah.
I think there's a lot in a steady voice that's it's been doing it a little while now. So
And boots on the ground, which a lot
that's
of
it.
companies, besides, places like Reuters or MNI, they put boots on the ground. You're in that camp. Adam's a gumshoe
Yeah.
journalist,
Well,
a
that's it.
closet, a
We
closet.
read every listen, nobody does the and I feel it more and more. And you talk to the equity guys. I saw a note the other day, it was like Goldman research. And they don't tell Goldman analysts like how many people read or download their reports from whatever
Yeah.
behind the portal you have. And they say because it would be too depressing for them to see. And that's Goldman Sachs research.
Wow.
Nobody does the work, Dale. And that I think is the ultimate edge in markets, is reading everything, actually reading the speeches, doing the work.
Yeah.
Everybody just wants to chase the next thing. Social media is just toxic for your attention span.
Yeah.
And, I just try to be the guy that does the work.
Yeah.
And I
You
think
can't be
that's the
lazy in
dying
this
breed.
business. You cannot be lazy in this business. Everyone tries to sell you the secret to trading for 10 grand. It's hard work and living through adversity, isn't it?
Yeah, you just got it's reading the reports, and yeah, stay. And then the mental side is we could talk about that all day, but
Yeah.
I think there is an edge in doing the work, and I enjoy it, so I feel blessed.
All right. Great having a conversation with you again, Adam. Like always, thank you for coming into F.A.C.E and edifying our community.
Go
And
USD. See, I told you I'm
uh,
representing USD. Go
yeah,
dollar.
and you better start saving your money if your kids are going to go there. It's probably like 20, 30K a year,
Yeah.
maybe
Oh, yeah.
40. All right, buddy. All right. So Adam Button, California Dreaming.
Yeah, that's
And
it.
that's a wrap, everyone. Follow Adam. He's
And go
one
Oilers.
of the
Go a big
best.
hockey game tonight. I know you're all hockey fans out there.
Yeah.
So
Oh
Canada
yeah.
hasn't won the Stanley Cup in like 31 years. So tonight
Okay.
is the night we're playing Florida, and I'm not going to be a Cad Bear tonight. I'll
Okay.
cheer on Canada
Well,
for
yeah,
that.
maybe we'll get
Huge.
CAD will strengthen and give you a better level to sell it.
This is the biggest
So
hockey game in like decades. So
uh,
we're
all
geared up
right.
for this.
All right. So it's not the Montreal Canadiens that are playing it, right? Or is it the Maple Leafs? Who
Edmonton
is it?
Oilers. Connor
Oh
McDavid,
my
Edmonton
God.
Oilers, best player in the world, playing Florida.
All right. Adam Button, everyone. Check him out. Adam's got a great perspective on everything he covers, and that's going to be a wrap for me. I'll see everyone tomorrow. Turn around Tuesday. Don't just count your grains and your coins and bitcoins. Count your blessings. If you're watching this broadcast, you're fortunate because you have money to risk. A lot of people in the world right now don't have money for necessities. So be grateful. And I'll see everyone tomorrow. Thanks again, bro. My trading
Thank you.
warrior brother, Adam.
Good luck with that air conditioning.
All right, man. Thanks very much. All right, everyone. That's a wrap. See you tomorrow. You could join the team on the Morning Edge in 13 minutes.